Good morning, everyone. Bom dia. Thank you very much for being here today. And thank you very much, Andrea and the Faculdade, for the invitation. I'm very happy to be in Sao Paulo for the first time. I am going to read my notes because it's more easy for me in English, so please forgive me if it's a bit tiring. So I am going to talk to you about some things I've been thinking of, starting from two research projects in which I took part during the pandemic, and trying to gather some ideas from those two research experiences to think about this household finance thing. So since the 2020, the global expansion of COVID has had a strong impact on the social sciences research agenda. In addition to the challenge of pursuing our work as teachers from the home, for many of us, the pandemic meant a reorientation of our research agendas. Without hesitation, we put our ongoing projects aside to immerse ourselves in the exploration of situations we recognize as extraordinary. We were aware that as sociologists, the pandemic offered us a unique opportunity to observe in real time a type of phenomenon that most had only read about in history books. This presentation aims to outline some insights from these extraordinary research experiences beyond their specific results on the pandemic and its effects. The purpose will be to consider the contributions they can make to economic sociology, and in particular to the study of the interactions between domestic economies and the world of finance, which is one of the lines of work I have been developing over the last few years. So between 21 and 22, I took part in two research projects focusing on the dynamics of household indebtedness during the COVID pandemic, projects which I shared with my colleague here, Ariel. In one case, it was a study centered on the situation of women, interested in particular in the links between indebtedness and the care crisis revealed by the pandemic. The qualitative fieldwork aimed at capturing the indebtedness of women from different social backgrounds living in urban and rural households in different provinces. As part of this goal, my work focused on the reconstruction of the interactions between women and the organizations and agents, whether from the financial system or not, that were their household creditors. In the other case, research was conducted as part of a federal project involving 12 universities from 8 provinces in Argentina. Focused on the dynamics of indebtedness among household and small and medium-sized enterprises during the pandemic and post-pandemic, the project was carried out in 2021. In this work, I coordinated a study to examine the living condition of senior households, which were one of the main risk groups for COVID, paying special attention to their interactions with banks and their use of financial instruments. The household economy and the role played in it by their interaction with financial institutions, both formal and informal, were at the center of both studies. The findings raise a series of questions concerning the existing academic production on the subject, while pointing out to some relevant avenues for future work. This is what I'm going to talk to you about today. So there are 3 issues that I'm interested in discussing here. And I really thank Andre for the invitation to this workshop, because it gave me the opportunity to put these ideas into paper for the first time, or mostly the first time. So first, some of the situations observed during the pandemic invite us to question certain analytical and demographic categories used for thinking about the interaction between household economies and financial organizations. How are the limits of these household economies defined? Is the usual statistical sense of households, that is to say, people living in the same dwelling and sharing expenses, the most appropriate for defining this dimension and these agents of economic life? As we shall see, these research findings show that household is a unit that can be both excessive and insufficient for thinking about these problems. Second, these findings also leads us to discuss some of the assumptions underlying the literature on the expansion of finance in contemporary capitalism. In particular, studies on the financialization of everyday life identify this process as the simultaneous effect of the withdrawal of the state and the advance of the market in the provision of basic services. Household economies find themselves increasingly financialized to the extent that they must satisfy in the marketplace the needs previously covered by public service provision. The universal scope of this timeline, established in relation to the Anglo-Saxon experience, was already discussed in other words, mine and from other colleagues. In this case, the observations made during the pandemic in Argentina contribute to showing that the balance between state and market is more complex and the boundaries between the two are more porous than imagined in those original descriptions of financialization processes. Finally, work on the pandemic also helps to draw attention to some effects of the expansion of finance that have been so far scarcely addressed. What are the practical effects of the increased penetration of the domestic economy by finance? How is the interaction with financial organizations integrated into the day-to-day administration of the household economy? And on whom do the resultant responsibilities fall? While attention has been drawn to the economic value that women contributed to creating through their reproductive work, this remained essentially associated with tasks not directly related to the economic administration of the household, such as domestic work and children care. However, as the observations made during the pandemic made clear, the daily tasks of managing money, making payments, applying for credit, and negotiating payment deadlines also belong to this unequally distributed care work, which is indispensable for sustaining the household and which can be synthesized in the idea of care's monetary administration. I have many doubts on how to translate the idea I had in Spanish, so you're welcome for suggestions if it is care money administration, monetary administration of care, or other. So each one of these issues, of these three issues, will be addressed through some specific observations produced during fieldwork. Our point of departure here is in this first point is the situation of a 50-year-old woman who had to move to her 91-year-old mother's house in order to take care of her before the pandemic. While she provided essential everyday care for her mother during the pandemic, the mother's retirement benefits pay for the essential expenses of the daughter's husband and sons who live elsewhere and can't work due to lockdown. So if we consider the usual statistical definition, we find ourselves, in this case, in presence of two different households. In each dwelling, there is a group of cohabitant people who share food expenses, although in one of these households, the one of the husband and sons of the lady we're talking about, the money contributions from the other, from the household where she and her mother live, are indispensable to make ends meet. However, the Dora story, this lady's story, shows us a much more complex situation than this definition suggests. She is located at the intersection of two houses and two family groups, the one in her mother's house and the one in her husband and son's house, which she calls my house, the one she forms with her husband and children, which he calls my family, and the one she forms with her mother, of whom she is the caregiver, in her own words. The web they all form together is woven by the care work, first of all, but also during the pandemic by the money flowing from her mother in one house to her husband and children in the other. It is the result of intense relational work through which Dora articulates meaningful links, transactions, and the means of exchange that make them possible. At the same time, this web of relationships, which is the distinctive feature of this Dora's domestic life, also exceeds both household boundaries. it would be not possible without a state which provides the mother's retirement benefits, nor without a financial market infrastructure. The key to the circulation of money is the credit cards with which Dora's family buys food, but which are paid for Dora's patient. Eugenia Mota talks about configuration of houses, configuración de casas, to refer to the way in which, in a given territory, different houses relate to each other, giving shape to multiple and changing relationships involving people, spaces, objects, and money. The family economy in which Dora is involved resists the usual categories for thinking about both care and the domestic economy. The circulation of affection and money between Dora, her mother, and the rest of her family cannot be adequately understood within the narrow frameworks implied by the statistical notion of the household. This calls for other kinds of conceptual tools in order to account, on the one hand, for how people, transactions, and money are articulated, and on the other, for what kind of spatial configurations are co-produced by these articulations. To fully understand, sorry, I have tried to move this thing for you to see. Maybe there? That's right. So to fully understand the second issue, I must explain some particular facts about retirement benefits in Argentina. Talking with the bank manager in 2020, he told us the pensioner, the retiree, will stay in there. He stands in line all through the morning. You have to offer him chairs, and he settles in. These were the words he used to describe the clients receiving Social Security benefits. Beyond the derogatory tone and the emphasis placed on the cost involved for the organization, the expression summarized quite adequately the usual practices of a significant portion of retirees. The situation is not new. Before it became mandatory to open bank accounts to deposit Social Security payments, and that happened in 2012, so like 10 years ago now, they were already carried out in banks, these payments, but over the counter. Each month, people had to go to the bank, to the bank following a previously published collection schedule, receiving their payments in cash at the cashier's desk. Some banks, wishing to reduce the burden of customer service, offered accounts to those who were paid at the institution, but only a part of the recipients accepted them. Generally, those who, as active workers, were already used to collecting their salaries at the bank. For this reason, it is not surprising that many retirees find it difficult today to determine whether or not they have a bank account. In practice, they go to the bank to collect their payments, as they always did, when the bank acted exclusively as a payment agent and not as a service provider. So, as happened with other issues, by preventing its continuity, the pandemic contributed to making visible the logic underpinning retirees' frequent practice of standing in line all morning at the bank. In doing so, it also helped to bring into focus the multiple forms that the interaction of domestic economies with the financial world can take. But above all, it revealed the central role played by the state in the growing penetration of financial instruments in household economies. The payment pension through deposits in saving banks, the payment of pensions through deposits made mandatory by court order in 2012 was much more than a simple administrative decision. It contributed to defining the contours of the relationship between the banking system and its clients, and also those of the intervention of the state, both supporter and beneficiary of that relationship. First, by introducing payment through banks deposits as an obligation for the Social Security system, the ruling contributed to establishing access to the financial system as a matter of rights, which we could call financial inclusion. Secondly, by turning Social Security beneficiaries into bank clients, it imposed on the latter the obligation to serve them while providing a portfolio of captive clients that, at least in part, was potentially attractive in terms of business. At the moment the measure was implemented, 7 million new clients came into the banks in Argentina, all at once. Thirdly, By channeling pension payments through financial institutions, the latter became the last or the first, as you wish, of the counter-serving Social Security recipients. Therefore, if anyone has to deal with retirees daily, it is not the state agents, but the bank employees. This last point leads us to focus on the changes that this process is driving within households or among them, as we shall discuss in the next point. Analyzing the careers of women and men in academia, sociologist Arlie Hochschild argued in the early 70s that universities had a tacit policy toward the family. By this, she sought to emphasize that although they remained hidden in the regulations, families, and within them especially women, played a central role in universities, creating the necessary condition for mostly male professors to develop their careers. The existing academic career, she concluded, subcontracts work to the family, work that women perform, referring to the set of care tasks assumed by women, which in turn made it very, very difficult for them to develop their own academic careers. Borrowing Hochschild's expression, we could say that the financial system also has a tacit policy in relation to the family. As is clearly seen in the case of the elderly, and particularly during the pandemic, banks do not define specific policies for customers who cannot adapt to the automatic processings, but outsource the work of families to ensure the management of their accounts. Indirectly, the state is also involved in this operation by delegating to the banks, without the production of other public intermediation, the care of social security holders. On the bank side, this undoubtedly ensures a reduction in operation and financial costs. On the client side, it implies an obligatory delegation, which is often experienced as a costly loss of autonomy in subjective and eventually also financial terms. So, thinking about the interaction between households and financial organizations require focusing on the relationship between three and not two agents. The role of the state is crucial, not only in its capacity as regulator of the financial industry, but also because of its contribution through specific decisions to cementing particular links between household economies and the financial system. There. So first of all, the two stories we examine here highlight the kind of tasks involved in what we have called this monetary administration of care. Second of all, this leads us to the following reflection. While care tasks have been historically invisibilized as work, some of them have managed to capture the public's attention more easily than others. Between the so-called domestic labor and caregiving tasks per se, there is a wide range of tasks that are indispensable for family life reproduction that does not necessarily fall into these categories, domestic labor or care. In general terms, what we call the care's monetary administration remains largely invisible and therefore unaccounted for. We refer to the activities such as contracting, terminating contracts, paying for services, making claims to different agencies and or receiving payment claims from providers or creditors, applying for subsidies and or social assistance, budgeting, keeping accounts of expenses and debts, managing bank accounts, among others. The two stories I talk about in the paper show how that this invisibilization of at least part of the non-remunerated work required to maintain family life does not occur only in the academic or the public policy spheres. The naturalization of certain tasks and also the burden they place on the people who are responsible for them also takes place in the home. At the same time, both stories clearly show that these tasks, far from being subordinate, are central to the reproduction of the family's economy. Also that their distribution is unequal, not only among household members, as in one case, but also among members of what at first glance we see as different households, but whose economies are strongly intertwined, as in the case of the mother and daughter. Here we talk about other mother and another daughter. Gender and generations are key categories then for thinking about this unequal distribution, especially when it comes to senior households. Finally, these accounts also make clear that the overload of care work brought about by the pandemic has to do not only with what happens within households, but also between them and a range of organizations that provide them with services, including primarily financial institutions. During the pandemic, the drop in household income and the growth of indebtedness also translated into higher workloads for women in charge of the monetary administration of care, as well as greater exposure of women to their creditors. Our research on women's interactions with money lenders and other organizations to which households became indebted during the pandemic places women's role in care's monetary administration at the core of the analysis. In doing so, it establishes a dialogue with the literature that has been interested in the impact that finance expansion has on women's lives. However, our findings point in a different direction from that noted by most of that literature. In general terms, based on a perspective that we have also highlighted in previous work, this body of work defends a view of financialization that does not focus exclusively on banks and trade rooms, but also pays attention to what happens in households, with its consequent effects on women's work. But when focusing on the empirical entanglement of financialization and household dynamics, these investigations concentrated on processes other than the ones we analyze here. One part of them focuses on what they call the feminization of finance, which includes the production of specific representations about women's role in relations to credit and debt, as well as the strategies deployed by financial organizations to integrate women as new clients, among them targeting women as a particular group of consumers, the incorporation of finance in ordinary spaces of daily life traditionally codified as feminine, such as the home and domestic chores, and the direct interpellation of women as financial subjects. Another is particularly interested in the ways in which domestic labor is implicated in the financialization of social reproduction. On the one hand, it is concerned with how processes of securitization connect household money with operations of financial capital. On the other, it focuses on how domestic labor, in particular, participates in the creation of financial value, as the former begins to be measured and valued in terms of its relationship to the performance of assets in financial markets. In both the above cases, it is possible to find a specific interrogation about how domestic work is transformed by the colonization of domestic economies by finance. However, in neither case does this question aim to describe in practical terms what happens to the care work performed by women in the household that is increasingly penetrated by financial instruments and devices. In contrast, the idea of the care's monetary administration aims from a pragmatic perspective at a systematic exploration of these changes. So some quick final thoughts. As part of the research interested in the intersections between households and financial products and markets, which we have elsewhere designated as studies of financial economization, the situations observed during the pandemic allow us to focus on hitherto underexplored aspects of those relationships and also to question some of the boundaries usually assumed when thinking about them. The first of these contested boundaries is the one that sets the limits of the household, of what is included and what is left outside of it when we think about domestic economies. The second contested boundary is the one that studies on the expansion of finance usually established between the state and the market. Research on financialization has depicted a scenario marked by the progressive withdrawal of the state and the resulting advance of the market over the places left vacant by the state. Observations made during the pandemic, however, show a much more complex scenario where the state and the market are not always mutually exclusive terms. Finally, this recent research has also helped to bring attention to a dimension of household interactions with financial markets that is central to describing how households are administered and governed with finance, but still remains understudied. I refer to how household work is transformed by the advance of finance, and in particular, how these changes impact women. In short, although it does not seem to have brought about radical changes, the pandemic did leave us interesting clues to problematize those that were already developing. Economic sociology has the task of rising to these challenges. Thank you very much for your patience.
Questions? I have to ask you again to use the mic. Yeah, we all thought that was a question, sorry. Because we are broadcasting this over Zoom.
Sorry for being a little bit late. I need to...
Yeah, please.
Which microphone? This one? Is it?
Whichever.
Oh, okay. Thank you. Sorry for being a little bit late. Before starting my work in Brazil, I also did research in South Africa. And one of the things that struck me is that in the economic anthropology in Africa, there's very little talk about household and much more about kinship. And here I noticed in the context here that the reference to kinship is much less pronounced. Yes, family, but that also very often overlaps with this notion of household. So I have the idea that the whole category of the household is much more prominent in this region. And I wonder why. I have no idea why. It is so much more prevalent. And I was wondering, given your talk and being critical of the household as a unit of study, being very problematic, why has it persevered so strongly, given that it's an economic category that has a European origin with specific ideas about what kinship looks like and family looks like? I don't know if that's a question that you could say something, but that's something I've been wondering about a lot, and I have not found an answer to that. So I was hoping that maybe you have an idea why kinship is not a category, analytical category that is so prominent in Latin American studies and much more prominent in African studies.
Do you want us to gather some question, or I go?
Do we have another question right now?
Well, thank you.
It's different. So
Okay.
Well, I could not talk about the African background so much. First of all, I would say that it would be very, if I was not sociologist but anthropologist, I would say things differently. So I think I am not sure that kinship is not a strong category among Latin American social sciences. I would say that it's not a strong category within Latin American sociology. So that's the first point. But it's true that household is a very strong category, and that's why I think that we need to discuss it, not just because of the assumptions the idea of household entails about a certain type of family, nuclear family, etc., but mostly in proper economic terms. This idea of household as a domestic unit and domestic unit as an economic unit. I think that that's what it's more complex than it seems. And I think it's very interesting, here in Brazil, there's this Grupo Casa in Rio de Janeiro doing very interesting reflection on critical reflection on the idea of household, and they don't replace household with kinship, but they replace it with casa. No, it is the house. No, it's a unit acknowledged by people themselves. It's the native category, the indigenous category, to think about what we call the household economy. No, so it's this configuration of different houses that are bring together through kinship and also through other kinds of links, a friendship, and also compadrazgo, when you're the godfather or godmothers of someone else's children, or also the relations, the links between neighbors. So, well, that's what I would say.
Thank you so much, Mariana. Thank you so much, Mariana. I really appreciate this discussion that brings us to the financial management of the household. And I wondered a little bit about gender more broadly, right? There are women, of course, but where are the men? And I remember work in providing elderly care in sociology more broadly, but not so much about financial management, which I think you really add to that story, is about daughters. Daughters are much more likely to do that. And at the same time, we know that when you know, at least stereotypically, I don't know the research on this, dealing with financial matters seem to align more with the man's domain. I find that a little bit in the childhood parenting economy, especially when it's bigger investments. Who knows about this? Who deals with it? So I wanted you to think a little bit about this intersection of class potentially and the kind of money. Is it lowbrow monies, pension, you know, kind of working class background matters, and then women have the upper, or women are called upon to do that, or do they in fact also manage bigger monies? And whether you have any insight, perhaps your field work was mostly in a particular stratum of the population, but how would you think that to be? And perhaps this is then the role of men, right, contributing care. So just, sorry about the rambling along those lines, was very stimulating, and I'm sure you have some insights. Thank you in advance.
Well, thank you, Nina. Yes, of course. Well, first of all, the two fieldworks were carried among, I would say, middle class, lower middle class, and working class households. It depends. In the case of the senior households, it was clearly mixed up, but we had both. But these two cases, I talk about this configuration of mothers and daughters, are from a working class, lower middle class, medium, and I think there's lots of things to think about. Clearly, crossing or combining class and gender here, because I do have the same idea, but it was not something that we searched for during fieldwork, that there's also, of course, a gender division of labor regarding the money administration in the household, and it's mostly among middle classes, but not only there. Men are. It's not that women they're the only ones dealing with money issues. They're the only ones dealing with everyday money issues. So that's the most striking part of it. So when it comes to big investments, when it comes to buy a car, to make savings to buy a house or to remodel the house, of course, things are different. But when it comes to paying the bills every month, to receive the calls from payment collectors, when etc., it's the women that are there. So that's that is what makes, you know, this money story also a care story.
So, wonderful talk, and I really learned a lot about sort of your invitation to think about the porosity of the various boundaries between kind of state markets, households that we tend to kind of compartmentalize. But I wanted to ask a slightly different question. I guess, like, more on the asset than the liability side of the story, and it has to do with whether there is a anything about the potentially increased interaction with the technology of financial payments that may open up new opportunities for women as kind of manager of the care economy. And I'm saying this because, like, so for instance, like I have lots of students who, when they approach the problem of like financialization of household economies, they really immediately go to platforms and start thinking about how, well, what's really important about that is that you actually have to interface with a very different kind of infrastructure, and that sort of like changes not just the subjectivity of the people who do that, but the sort of like, I guess, the subjectivity. Yeah, I think that's maybe the best way to put it. Like, so I was sort of wondering if like you see any of that, any such dynamics in the field.
No, thank you. Yes, well, as everywhere else, the pandemic was the moment of the huge expansion of fintech and all these wallets and, mostly wallets and payments platforms. And in an economy where the informal sector is so big, this kind of payment systems helped all these informal commerce that was still going on in cash to allow to remote payments and credit card or debit card payments. So it was key to the survival of the informal sector during the pandemic. So that's clearly a big issue. I have not explored that from a gender point of view. I think in that, but yes, there's a clear generation issue there. So it's not that these platforms help women to start doing things that they didn't do before, but these platforms give the youngest of the family new jobs. So in the case of all these retirees, every one of them had some son, daughter, or nephew, niece, or mostly granddaughters and grandsons that were in charge of payments or in charge of collecting the retirement benefits, because they were young, so they could go out more easily and it was not so risky for them, but also because they could do it with their cell phones. The old people said, well, no, that's my grandson and he does everything through the cell phone. I don't know how he does it, but he does it. So I think that, but the what is interesting here is in this case the most frightening infrastructure was not the e-wallet, but the ATM. So not to have a person and flesh and blood to talk with, to negotiate, to ask for questions, etc. The other thing is that when you go out from the city or the richest suburbs, the banking infrastructure is very poor. So for these people having to go to collect their pensions, supposed to take a bus, or to have someone to drive them to that place. But yes, of course, it's something that needs to be studied. And it's very interesting how this new technology adds a new layer of this financial penetration of the house. I think of the household economy.
Congrats for your presentation.
Thank you.
Do you understand the process of household economy and the increase of the participation of seniors, retirees, and women in the household economy a part or a consequence of financialization process of could be a kind of resistance against the financialization process?
What, in the case of the pension system, well, you know, there's also many different layers because, you know, in Argentina we had the privatization of the retirement of the pension system in the 90s. That is the change of system from the distribution one to the capitalization one, and then we came back to the former. We came back to the former 10 years ago. So in that aspect, it was like a financialization process that had. It was not a one-way process, but it's more complex. That said, I think that in another sense, when we think about that would be in one of the senses of financialization. In the other sense, clearly, this extension of the pension system through different policies that included new layers of people into the provision system was clearly a driver for bancarization, I would say, first, and through that, financialization, at least of one part of that population, because the fact that they have bank accounts make them appealing for the banks to offer them other services, may that be credit, insurance, credit cards, etc. And in that way, I can't see any true resistance to financialization. It's different ways of incorporating those services, those products, different kinds of relationships between those new clients and the financial organizations, differences between at the financial literacy level, but not, I would not say resistance.
Can you follow up?
Mm-hmm.
Do I have to go there?
I think you might, yeah.
I would like to build on that question with the one that I had that I didn't think was connected. But how persistent is the phenomenon? Right now, people can go to the counter again. And I think that would tell us that, I don't know whether you had the longitudinal dimension to the research, not resistance in a sense, but really kind of this was the moment of time, we put up with it, but we don't really embrace it. And we will go back and do things. And whether there's any variation as to whom would do this, any thoughts along those lines?
Yeah, well, for one part, of course, there's one part of these new clients that were not new, that were already bank clients before they retired, so they are aside. Then there are many people who came back to the banks as usual. Once they could freely walk, they came back to the line. It's a ritual thing, you know. It's a moment of gathering with others. It's many things, you know. We had this lady. She was classic middle class, who said, I loved going to collect my retirement payments. It was the one day of the month where I dressed up and I go out, and as I had my pension collected, I could go to the bar and take a coffee and have a piece of cake. It was my special day, you know. So when she could do it again, she went back to do it. But at the same time, you have, you know, this. It's something that we didn't research, especially, but that came up in the interviews. For many of these people, mostly the elderly, given their sons, daughters, or grandsons or granddaughters the authorizations to do those things, those errands for them, was like a one-way process. Once they had delegated that, they didn't got back their own rights. And that it's not only the authorization to go and do some errand, but to have access to the money or to the instruments or to the credit cards. So it's a question of autonomy in many different levels, not only economic autonomy, but also subjective one. So I think that there are many different things. And what it's interesting because when you discuss with bank tellers, with people working at banks, they say, oh, the retirees, I hate them. They spend all day here, they want to chat, they are too slow. I don't know why they love being here, we hate them. And at the same time they say, it's a 10-year problem. In 10 years we don't have this anymore. Because these ones would not longer be here, and the other ones are already used to this system. So basically we're not doing anything. We're just waiting for 10 years for the time to pass, like chronotherapy. and it's very interesting because when you look at that from more ethnographically, all the bank agencies everywhere have this security guy at the door, like the security guy. He's there to prevent robberies, I think, mostly. But as he's there, and most of the time there's no threats or robberies, what he does is to help people. The lady who that doesn't know how to use the ATM, who has forgotten her glasses and can't read the screen, the one who does not know how to use the totem for the numbers, and so it's like the true financial inclusion agent, but he's paid to prevent robberies. He's not paid to financially educate the clients, but in fact it's what he does most of the time. And it's always, most of the time, it's a man.
Yeah, no, it's early. Thank you. I'm going to continue this bad habit of making a comment and pretending it's a question. So this is really interesting. On your sort of second big theoretical concept about this boundary between state and market, I wonder if what you're highlighting here is something a little more specific and maybe in some ways more interesting. Because on the one hand, I think that we know that yes, like states are typically involved in the construction and the persistence and the operation of these kinds of consumer credit markets, right? So it's not just withdrawal of the state managing this sort of marketization process. But your case highlights this rather different kind of mechanism where it's about the processes through which financial firms intervene in transfers between the state and individuals. And I think that opening our eyes to that is really important because that's actually an important market for a lot of financial activities. It's often one where there's a lot of extraction for reasons, right? Because people like retirees are, as you suggest, are a great niche because the payments are always guaranteed. So then you can it's low risk and you can take a lot of money.
Most of the time they don't default because their credits repayments are directly deducted from the paychecks. So they're excellent clients. Yes, thank you for your comment. I think that if we look at this picture, there's also another layer that is in this relationship within state and financial organization. That is the more classic social policy financialization issues. For instance, the security, the social security according credits for not bank credits but its own credits to their beneficiaries, or the ways that this social security system is funded through, for instance, the control of assets control of some big companies where it has participation because they were former public companies that went private. So, but most of the time when we talk about social security financialization, we talk about this. We talk about how this privatization or re-estatization processes took part, and what's the part of financial capital in those processes. And what I am trying to highlight is how this specific relation to finance happens in a daily basis. No, so I think that it's this. I can't find a word. It could be like trasvasamiento. I don't know if someone knows how to say that. Like when you bring the liquid from one recipient to the other, like it's how the states delegate some of their own responsibilities on the financial organizations, and get those financial organizations against their will to become responsible of the dealing with some population, no? And I think that there's some interesting things to think about. That the case of the elderly, it's only one very clear case because it's this population that has these special features. As they say, it's maybe it would be a problem for some more years, but not for all the time. When the pandemic started, when the lockdown measures started, we went into lockdown at the end of March, so like the 20th of the month. So the end of the month was approaching. The first days of the month are the days where the retirees collect their payments, and suddenly, of course, they were like the riskiest group of the population in face of COVID, and like 10 days after lockdown, suddenly, all the elderly people were doing in line on the street in front of the banks. All of them together, like all the ones who were the most risky, in line to collect their payments. And it was a huge debate. How is that anyone could prevent this from happening? It's obvious. And we had this, I had a slide of that, but I didn't bring it. The president of the central bank saying, we didn't see this coming. And how is it that you don't see it coming? You're responsible for the organizing of the whole banking systems, and everyone knows that people go to the bank and stay in line all the morning. So I think that's kind of a black hole. It's not a black box, it's a black hole. No one is thinking of that.
Fred.
Hi, Fred, how are you? Welcome.
Thank you. Just off the plane, sorry. So I have a question about diversification and ambiguity. So we think about the credit and loan products and services, and you're thinking about that transition where a lot of even the state functions has been sort of bankerized. But there's a lot of diversification of those products, and so that you have products that are probably pretty good for you, but most of them are pretty bad for you. But everyone's confused because of the great diversification. And so there's something about being able to have a single company or bank with such a diverse set of offerings, and no one even knows like what the terms are, and everyone's confused. And so that you can have the same organization sort of offering up good and bad, and they advertise the good parts, and they do the nonprofit part of the good inclusion. And so how do we think about the role of diversification and its likelihood of reducing resistance.
Yes, well, in this story of bank pensions, bancarization, at the beginning we had only 5 banks at the national level paying retirees. They were the biggest public banks, and three private banks who saw the niche there. and started collecting these new clients. Since the pandemic, this changed, and the government forced the rest of the banking system to accept these clients in order to split the burden of this kind of clients. And I think that in some cases this led to some interesting diversification. Not in all of them, no. I think that in, even if financial inclusion discourse and financial inclusion or financial literacy policies are gaining weight and relevance in Argentina, or are now part of a nice part of what's at the state level. We are still behind what's happening elsewhere. So, so yes, of course, it could be a way to reduce resistance or to foster other kinds of participation. But for now, we don't see that a lot.
I'm sorry I have to wrap up, but we'll be back in 10 minutes with Martin.
So we have a pause?
So,
We have a pause?
yes.
Okay.
I have coffee.
But thank you.
Thank you very much.
There's coffee.
So, first of all, I would like to thank Andre for organizing this wonderful workshop and giving me the opportunity to present here. It has been a really fascinating 2 days. What I will talk today about is an introduction that I wrote to the recent... What? It's not working? Oh, wait, now it's working.
You just had to wave the hands.
So the background for my talk is an introduction to the recent issue of Economic Sociology Perspective and Conversations, which I have been edited for the last year. But there is a broader background to it, which is the last 3 issues of Economic Sociology Perspectives and Conversations, what used to be called the Economic Sociology Newsletter. And the 3 issues are actually 2.5, were devoted. Is it just me that I hear this echo, or do you also hear the echo? Okay. And so the 3 issues aimed to think about and theorize. Sorry? Closer, okay. But then it will be really loud. Okay. So the 3 issues tried to theorize what it would mean, or how economic sociology can contribute to the discussions about inflation, and it had contributions from various authors. And I mentioned this because much of the ideas that I will be developed were somehow emerged out of the conversations with those authors. So I think a lot of credit should be given to them, and including Ariel Vilkis, who is here, who wrote a wonderful article in the last issue. So to give a short outline of the presentation, I would first briefly talk about the return of inflation as a public problem. I would talk about the 3 approaches to inflation. I will then talk about what I call, or what can be called, a pragmatist approach to inflation. I will briefly talk about an empirical case of Poland and analyze 2 specific, what I call, problematic situations of prices and child support. So the return of inflation as a public problem, and I use this notion of public problem from Joseph Gosfield rather than a political problem. And a public problem is something about which someone ought to do something, or matters of conflict and controversy in arenas of public action. And you see that inflation has, over the last 2 years, returned to Europe and to the US as such a public problem. And here are first pages of various newspapers that sort of show how inflation, which for a long time was not discussed very publicly, re-emerged as a public problem. At the same time, there has been an overall lack of attention to inflation in economic sociology, and I'm speaking about European and American economic sociology, because there's wonderful work in South America on the subject. So inflation is one of the few topics, I would say, where sociologists wrote more about, one of the few economic topics where sociologists wrote more about inflation before the development of new economic sociology. So in the late 1970s and the beginning of the 1980s, there were discussions about a sociological approach to inflation, to the extent that when Albert Hirschman discussed various theories of inflation, he distinguished structuralist and sociological as types of theories of inflation. But with few very important exceptions, economic sociologists in Europe and in the US have neglected the topic, and in South America, of course, this is a very different story. And I mean, there are many people in this room who are far better experts than me to talk about this. But there has been wonderful work on the subject over the last 20 or 30 years. At the same time, economic sociologists have dealt extensively with what can be called adjacent topics, such as sociology of money and sociology of prices. And thus have much to contribute to our understanding of price instability and inflation. So there have been over the years many approaches to inflation, but one way to categorize them or try to sort of order them is to distinguish 3. Of course, there is the the monetarist approach, which treats inflation as too much money chasing too few goods. This is usually often the one that economists talk about. Then there is what can be called structuralist approaches, and structuralist approaches trace the causes of inflation back to some sort of relations. So in the case of Goldthorpe, it was relations between social groups. If you look at the work of Albert Hirschman, it's the relationship between sectors, or more recently, if you look at the work of Isabella Weber, it's the relationship between markets. Her idea being that there are certain, what she calls structurally significant markets, where the change in prices in those markets influences prices in other markets and creates inflation. But then there have also been constructivist approaches, which analyze and show how inflation is socially constructed, focusing on the conflicts, on how it should be measured. And there is wonderful work on sort of the social measurement of inflation. So what I try to do is think whether there is something that can be called a pragmatist approach to inflation. And two caveats. First, I'm not making a strong claim that these other approaches are wrong or anything like that. Second, I'm not claiming this is in any way my idea. I'm rather just trying to summarize the discussions that have been had over the last 2 years in economic sociology, the journal, and was inspired by a lot of authors, but especially by Federico Neyberg and Bruno Terret's discussion about what is pragmatism and what is a pragmatic theory of money. So what would it mean to talk about a pragmatist approach to inflation? And we saw over the last 20 years a revival of pragmatism in sociology, both in Europe and in the US. And pragmatism has been especially important in economic sociology, with various authors trying to theorize economic action, industrial development, valuation, organizations, financial crisis, households, and capitalism, referencing pragmatism. And pragmatism has even been used to theorize the process of theorizing itself. So Svedberg, for example, tries to think how we can theorize theorizing and goes to pragmatism. Of course, different authors have used different pragmatism, different authors, different ideas. But one way to think about a pragmatist approach to inflation would be to go to the pragmatist maxim of Charles Sanders Peirce, who wrote in How to Make Our Ideas Clear, consider what effects that might conceivably have practical bearings we conceive the object of our conception to have. Then our conception of these effects is the whole of our conception of the object. In a more recent and I would say more understandable reading from the new pragmatist sociology, it is this idea that the meaning of every idea, no matter how abstract or scientific, is to be found exclusively in its consequences for experience. So this idea of what are the consequences for experience would be central is central to a pragmatist approach. So here the idea is not to start with the causes of inflation like a lot of structural theories do, but rather to start with its consequences. And there is, whether it's the work of, especially you can see this in the work of Federico Neyberg, but it's also to look at how inflation is experienced and understood and translated, to reference Andres yesterday's talk, and how it challenges habits, creating what can be called problematic situations. And this is a notion I take from Gross, Reed, and Winship, where the various authors try to think about what are problematic situations and their significance. And that inflation creates such a problematic situations across the social space. And the consequences of inflation has often been assumed rather than investigated. This is something Albert Hirschman pointed out. And a lot of the most attention have been to extreme cases of high inflation. And because these are, you can see most clearly the consequences there, with less attention on lower rates of inflation. At the same time, we know that different types of inflation have different types of consequences for different people, I should add. Very high inflation, above 100%, has different consequences than what can be called creeping inflation, with annual rates below 10%. At the same time, such a pragmatist approach looks at consequences beyond costs. So economists often talk about the costs of inflation. For example, they talk about the menu costs, which is the fact that when prices change, restaurants have to print new menus, which costs. So this is a cost of inflation, and this would be one of the sort of ideas of, or the inflation tax. It's usually consequences of inflation are seen as costs. So this idea of a pragmatist approach is to start with problematic situations. So rather than study inflation from the top down, macro, or study it from the bottom up, you analyze inflation from the problem out. So how does inflation create various problematic situations for various social actors, and how do they respond to those situations? So where do problematic situations appear in different types of inflation? How is inflation visible in various social relations? Employer-employee, firm-customer, firm-firm, citizen, state citizen, or even ex-husband, ex-wife, and I will talk about this later. And when do problematic situations appear? So clearly there are some consequences of inflation that are immediate, and then there are delayed consequences of inflation, and these, for example, for me are really interesting. And finally, how is inflation explained by people, and how do they assign credit and blame in relation to it? This is something that Ariel talked about yesterday. So who is blamed for inflation? And you see this in the language that is used, whether it's Bidenflation, COVIDflation, greedflation, Putinflation, that you often have explanations in language itself. And to reference Charles Tilley, what are the stories, technical accounts, codes, and conventions related to inflation? And I think here we can really draw on the work of Charles Tilley, the late work of Charles Tilley. And it would mean to analyze inflation as a total social fact, and I know this notion has been overused in economic sociology a lot, but I think there's two understandings of the notion. One is a methodological, just to say you have to take very different things, look holistically, but then there is a stronger claim, which is that there are certain phenomena, and if you go to Mauss, he says they set in motion the whole of society and its institutions, and in other cases a great number of institutions, this idea that they set in motion, and that they're at the same time juridical, economic, religious, aesthetic, morphological, political, and domestic. And they draw in social classes as well as clans and families. And this is something that Jean Lazarus points out in the last issue. Certain facts set in motion the whole of society. But this, of course, is a little bit abstract. A later period between November 2022 and April 2023, when the annual memoirs about inflation, where people could send in their memoirs or diaries. And we received 120 of them, and they're different lengths between 5 and 55 pages. And this method of using diaries is a very Polish method of analyzing. We sometimes call it even the Polish method in Poland, which is a little bit much. But we see a revival of this in recent years, especially during COVID. People were asked to write diaries about COVID, and it goes back, of course, to the tradition of Tomasz and Znaniecki. But I've been talking about with Andrzej, and Andrzej had this idea that you could sort of use it more now with WhatsApp, where people write these, you could sort of update this method. We used the old way for various reasons, where people could just write diaries. And in those diaries, you have detailed descriptions of shopping practices and experiences of price increases, but also you have beliefs, memories, and fears related to inflation. And I mean, just to mention it, these are two very different inflationary situations, two types of data, and in a way, two theoretical frameworks. So the first approach is very Durkheimian. It's about how society represents inflation and makes inflation visible, even though it might not be very visible on an everyday basis because it's 3 or 4%, so prices are not changing day to day. And the second situation is much more rooted in pragmatism of how habits are changed and how inflation is impacted on individual experience. So here is a diary of a 42-year-old woman who says, "I've been depressed since this morning. All the media are talking about yesterday's reading of the inflation rate. The majority of people at my work are talking about it. What will it be in March, they wonder? Nobody is expecting it to decrease, but perhaps it could just stop rising." And on that day, I think around that day, this was the front page of the newspaper, which read, "Inflation has reached adulthood," because inflation was above 18%. And it was the first time inflation has been above 18% since 1996. But at the same time, inflation becomes very visible at home. So this is another diary where a 31-year-old mother writes, "The Bright Gang is a children's book made by Biedronka, a large supermarket chain called Ladybird. Who is the anti-hero? Bad, disgusting inflation. My kids will understand the concept and the phenomenon from their earliest years. And stupid me, I needed 30 years to understand what inflation is." And here you can see the book. The inflation is the green creature, which presents the good people, which are the gang, the right gang, from saving money, because saving is their mission. This is a very Weberian, I think, little children's book about how you should save money. And Biedronka, which is a ladybird, sort of is protecting kids from inflation. So to go back to the pragmatist approach of starting with problematic situations, I will look at two situations. First, about paying for things, and second, child support. So first, what we see is that prices are no longer taken for granted. They become in many ways visible, and prices become denounced, and receipts become public objects. And here is the diary of a 34-year-old. She's a writer. She's a little bit cynical, but I think she captures something when she says, "Everyone leaving the shop takes the receipt into their hands, reads them out loudly, and comments on it. This is expensive. That has become more expensive. The promotions did not sum up, and they did not save 2 zloty on Greek strawberry yogurt. I see them all standing near Lidl or Kaufland, which are supermarket chains, like a choir with receipts in their hands, singing their receipts out loud to a melody of some sad Christmas carol. The conductor is, of course, the invisible hand of capitalism." But what she writes about is quite cynical, but this is what is happening. People start comparing receipts. They share them on Twitter. Newspapers publish people holding receipts, calling them receipts of horror. So prices become something that is scary, something that is very worrying. And this idea of receipts of horror becomes one of the ways of representing inflation in the media. And these receipts of horror and inflation becomes retranslated, to return to Andrzej's yesterday's talk, as a folk concept of drożyzna, which is very difficult to explain or translate, but it would mean the state of expensiveness, that there is a expensiveness, the life has become expensive. And this is a diary of a 57-year-old teacher who writes, "The topic of drożyzna dominates conversations with neighbors. It's even more common than discussions about the weather. It's the same during social gatherings. People talk about absurd prices and situations to improve their mood because shared poverty and trouble brings people together." And here you see the front page of a tabloid which says alarm record state of expensiveness is coming. And this notion of drożyzna is interesting, is picked up by experts. They begin to talk about inflation using this folk concept to explain why we should worry about this. And then there is this process of what Tilly would call assigning blame for drożyzna, which is the state of expensiveness. So around Poland, you see pop up these billboards which says peace equals drożyzna, peace is the ruling party. And you see them on public transportations of city municipalities which are from the opposition. So, of course, there's a political aspect to this. And in various public spaces, inflation is blamed on the ruling party, trying to make the connection that they are the cause of inflation. But at the same time, you see the government avoiding blame for inflation. And this is the picture of the Central Bank of Poland, which had a huge banner. I think it's still there. The main causes of inflation are Russian aggression in Ukraine and the consequences of the pandemic. Blaming the central bank and the government for high inflation is the narrative of Kremlin. And they also had a mobile version of this, of a car driving around, trying to say that inflation is not in the fault of the government. And sort of this back and forth of blame game and avoiding blame is quite common. And it's not only done by the government, but it's also done by the corporations. So here is another diary of a different mother who again talks about this children's book that she received from the workshop, from the supermarket. She says, "I will try to make monthly comparisons of prices in the supermarket to see how they are changing. I'm especially curious because we are reading with my daughter the book The Bright Gang before she goes to bed. The author tries to explain to children what is inflation. Of course, the book raises the idea that in Lady Bird the prices are always low, the slogan of the supermarket chain. So we will see how much truth there is in that." And you see supermarkets trying to sort of push away blame for price increases, and you have stickers in Lidl, for example, that says Lidl is protecting Polish families from inflation next to prices. And sort of this idea of trying to avoid blame for inflation is quite important and quite visible. So the second problematic, how am I with time, Andre?
You have 3 minutes.
Okay.
25, but...
The other problematic situation is court cases of child support and alimony. So it's important here to mention that in Poland, child support and alimony is not indexed for inflation like it is in other countries. And you see a growing number of cases over the last year related to child support and alimony, with women asking courts to increase their support while men ask to keep it steady or decrease. And sometimes both sides justify their claim saying because of inflation. So here you have a diary of a 45-year-old man who writes, "I have to pay child support for my previous marriage. The court increased its amount by 100%. I mean, inflation was not that high, but probably it was established some time ago. I understand the other side also feels that life has become more expensive, but the question is how to patch the resulting hole in my budget when, well, it is clear you need to save on everyday expenses, but everything has its limits. The comfort of life consists not only of meeting the typical physical needs, but also the spiritual ones which provide mental rest, entertainment, providing free time, interest. Some things can be limited, some can be completely given up." But of course, this is a man's perspective on this. But if you look at the courts, there haven't been many rulings because court cases are slow and it will take time to work out through the court process. But in one recent court ruling, the judge said, despite significant inflation in recent times, the court did not increase the alimony, taking into account the health situation of the counterclaim defendant. And judges are in a position where they have to decide, do I increase child support and alimony because of inflation or don't I? And how much? So at the micro level, inflation facilitates conflict over family transfers. And here we can quote Viviana Telliter, where she says the disputes go beyond money as such. They center on the mutual rights and obligation of household members. But at the macro level, you see that inflation has different consequences, not only for different classes and for creditors and debtors, it has been often argued, but also for different genders. And this is also a point that Jeanne Lazarus makes in her article for the issue, for those who pay and those who receive alimony and child support. And here, of course, class matters. So it's a intersection in the sense that poor women are less likely to be able to afford to go to court to have their child support raised because of inflation. And you see also the delayed consequences of inflation. So unlike prices, which change quickly, child support, these will change slowly. So you can imagine a situation, because inflation has begun to go down in Poland, that inflation will be back to, let's say, 2 or 4%, but it will still be making a difference in the lives of women in 3 years when the court decides your child support will be increased. So there are certain delayed consequences, and I think it'll be really interesting to study those delayed consequences of inflation. So to conclude, I've argued that economic sociology has much to contribute to current debates about inflation. I argued for a pragmatist approach that focuses on consequences and problematic situations, and that this approach, rather than analyze from the inflation from the top down or from the bottom up, and here I'm referencing the work of Guadalupe Moreno, who criticized Federico Neyburg's article, writing that we have to look at money from the top down, not from the bottom up, and to say that we can look from the problem out and sort of solve this. Maybe not solve this, but it's a different way of looking at it. And I analyzed 2 problematic situations, paying for things and child support, but there are many others. And you see them in those diaries, asking for wage increases, giving money to the priest during pastoral visits, because a priest comes, last year I gave him 100 zloty, should I give him 120 because it's inflation? How much should the priest charge? For the church, inflation also becomes a problematic situation. And as well as rising prices in your small businesses and explaining it to regular customers. And all these problematic situations have their own temporalities. They happen at different moments, and they spread out over different amounts of time. And that is it. Thank you.
Questions?
This is really interesting. I'm thinking about another kind of potentially problematic situation. I mean, there are many, but a somewhat canonical one, at least in the U.S., in the history of 20th century inflation in the U.S. The former chair of the Federal Reserve, Paul Volcker, famously carried around a schedule of union wage negotiations. And the key concern was that unions were going to be basically creating the kind of critical problematic situation for inflation. Now, that seems to be, particularly in the U.S., that would be a ridiculous thing for Jerome Powell to do because unions just aren't important in the same way. But, you know, at least I don't know enough about the Polish case. Would something like that, would, you know, wage demands of unions constitute a similar kind of problematic situation? And what might be some of the implications of unions as an actor in this kind of problematic situation?
So regarding the role of unions in Poland, unions have been for the last 20 years incredibly weak, so they have no role in this. Regarding the problematic situation, I agree with you, but sort of the idea of unions, unions pushing for wage increase, creating inflation would be a very structuralist approach, and it's interesting. I would be interested in the other way, whether inflation creates unions. So Joanne Robinson had this idea that if you have inflation, people begin to realize their wages are increasing. They start, we have to do something about this. And she argued that sort of inflation might lead to higher, more people joining unions. So I think this could be also one way of thinking about the relationship between problematic situations and unions.
Thank you, Marcin. I love the presentation. I have 2 questions. First, who or why define the problematic situation? Because this problematic, many thinking in comparison with Argentina, you put in many and define many problematic situations that in the Argentine case that we have a long tradition of inflation is not necessarily a problematic situation. The people resolve situations. So how can you define, who define? It's a theoretical definition, it's a pragmatic definition. And the second question is if in your frame, theoretical and empirical frame, the politics play any role, if you are thinking any relationship between inflation and political experience, political evaluation, etc. Thank you so much. I love the presentation.
Yeah.
Argentine connections. We are always.
Well, thank you very much, Martin. It's wonderful. I find everything very interesting. And, well, it has to do with many things we are trying to think about also in not only as people suffering inflation, but as sociologists. And I was thinking something about politics. That's why I want to build also on a real comment, because, well, in Argentina, of course, inflation has been a public problem for a long time, but for a long time now. But part of that definition, today is the framing of inflation as an economic problem. No? And this has not been always the case. In the 80s, the political aspects of inflation were a huge part of the local debate. Even if in academia, debates were monopolized by economists. And it was the sociologist's job to bring politics into that debate. We have this very famous sociologist, Argentinian sociologist, Juan Carlos Portantiero, a specialist of the democratic transition, that speaking about the democratic transition, used this expression like the inflation was a phenomenon of fronteras, a boundaries phenomenon. It was economic as well, it was political. No, and what he meant was that inflation was the result of a broader conflict around over income distribution. That was the point. So the problem with this view was that it was mostly a top-down view. So we were talking about labor capital conflict, about different economic sectors. So what I was wondering is how this approach to inflation from the problem out, which I found really appealing, can bring politics into consideration. Because one of the things, and it's something that happens to us when we interrogate other issues of household finance, of the everyday life of economics, is that we tend to leave politics outside. So outside of the picture, whether it is not outside at all. Thank you.
So really excellent questions and much to think about. Regarding how do I define a problematic situation, I must say I'm torn. So one definition would be to go, let's say, more with Bourdieu and his notion of hysteresis. So there are situations when structures and dispositions don't align. And this sort of forces people to reimagine, which would be sort of more not following actors, but rather just observing and saying this is a problematic situation. I'm leaning more towards the one where I see that someone is clearly struggling or someone is experiencing a change in habits, routines, ways of doing things. And this would be I think, the definition. So more from the phenomenological side. Regarding politics, I think here is one of where you see the limits of the method of diaries. Politicians, I don't have diaries of politicians. I don't have. This would require talking about doing expert interviews or ethnographic observation. But I think this same phenomenon applies. So you can go to a central bank and look at, and I think Douglas Holmes has done this, from the problem out. How do central bankers deal with the situation of inflation? How do they see it? How do they react? Who do they respond to? Similarly with politicians. But clearly, I mean, I don't have politics in here because I'm following the diaries that I have, which are, people who talk about their everyday lives. There's some shop owners, there's It's mostly about the household, but clearly sort of a full pragmatist approach would need to introduce politics clearly, and this would require looking at very different problematic situations, even from those I have discussed here.
Can you elaborate a bit more on that methodology,
Uh-huh.
like diarist methodology, how you do it?
Mm-hmm. I mean, it's well established in Poland. What you do is you release a call for a diary, and there is a reward for the best one, which has its limits, but also you're able to get more people to write. Then that 3 get awarded a certain amount of money, and people write them for various reasons that you have to take into account. Some of them write just about their everyday experience. You have professional writers who just write a lot of these, and you have to take this into account. And this is one of the limits of the method. But at the same time, you're able to follow people over the course, and they write some of them are short, some of them are long. And I mean, I'm aware, and I see people reacting weirdly. I myself reacted very weirdly when I heard that people get something. But as I was explaining with people who've done this for a long time, if you don't offer them, you will maybe get 3 or 4 or 5, and here you get more because there is certain of a financial reward.
And it's people from different.
Yes, I mean, so for example, this is why I was talking with Andrei with WhatsApp. This wouldn't work in Poland where people record, because people don't record messages on WhatsApp. This is not a Polish thing, but you could do it. Imagine doing such vocal diaries in South America. You have, I mean, in case of the 110, they're very different in terms of income. Where they live is very different. Of course, you get highly educated people, more high.
In terms of age?
Very different. You have all the retirees, young people, very different. A little bit this was because they do these diaries so previously there were the COVID diaries, and people who wrote the COVID diaries, they had a lot of time. Some of them returned because they liked the experience of writing about their everyday life. They returned to this and they sort of wrote for this. It is a little bit like in the UK there was this mass observation in the 50s and 70s where they asked people to observe social life. So here the Polish School of Economics is trying to do the same, where they every 2 years or 3 years before there was the diaries of the unemployed, there was the LGBT diaries, and sort of through this you're able to build some sort of relationship with certain people. And when you read these diaries, some of them write, I wrote previously and I'm writing again. And some of them you clearly know that they're writing because they want the reward, and you just have to take this into account and you have to be diligent in that regard.
But I would say in general it's something people do for themselves.
Yeah.
It's like something that is huge in the Polish culture to write your diary on different issues. And the method is built on that, relies on the fact that the people have this habit.
I mean, there is a habit of writing. Of course, it's gendered, so more women. Also, you get more women writing these diaries than men, and women's art tends to be longer. But I think there is. I'm not sure if it's. I don't have data on how many people write diaries every day. But you try to frame the call in such a way that they can talk about their everyday experiences and their fears, their emotions, and with all the limits that I see, that I understand. I think if you're interested in a processual account of inflation, which I am in, sort of how things happen at different moments. So just to go back, I mean, you can see with these diaries very nicely that you have a public collective representation in the media, and on the same day someone writes in their diaries that they read it, and if you just have the newspapers, you don't know how people make sense of the newspapers, what they read, where they read, etc. So I think for sort of a processual where you're interested in time, and I'm very much interested in temporality, these diaries are an interesting. Sometimes, I mean, previously these diaries were over life course, talk about or a specific situation, unemployment. Here we try to encourage people to write. But some people write every day, some people write once a month. These diaries, some people draw their paintings. You get poems. It's a very mixed bag that you somehow have to work with.
Do you mind if we collect some questions?
Yeah.
Time constraint.
Okay.
Thank you. Very interesting. I was wondering regarding the public debate in the newspaper. Poland has its own currency, but it's also part of the European Union. And the European Union and the euro also has inflation, but not to that extent. Is that debate changing because of this? Do you see attitudes towards the EU or the own currency and the euro changing? Would you say something about that?
Yeah, I mean, one thing you see is not with this, but with the other project earlier, that that what happens when inflation increases, you begin to have rankings. And Poland was always ranked in relation to other European countries and saying, our inflation is much worse than theirs. We are sort of the outlier, and fears related to being an outlier. But you also see it in the UK. So if you look at UK newspapers, they would write, we have the worst inflation in G8. And there is this very nice concept from De Santos called the fact totem, where he talks about how numbers become tom-toms and how rankings play an important part. So I would say here it is very, but it hasn't spurred a discussion about euro very, very much, contrary to what I would have anticipated. There was a strong discussion of euro in the 2010s around the financial crisis, and then sort of this political parties sort of left the discussion, and now it hasn't really picked up.
So I'm going to ask a question that I don't expect an answer, so other people can ask questions. The first one is if you've made any comparisons to the diary methods that have been used for sociologists studying health. So thinking about Susan Watkins and Ido Taveri and others, and what are some of the similarities and differences, because that's another place where they were able to sort of look at process and come to conclusions that they just would not have come to otherwise. The second is the extent to which you're really capturing public culture in the through the diary method, and you're actually capturing the state. What's surprising to me is where the states, the hand is active but is not named. And so are there ways of thinking about how everyday people are understanding the state without naming it? And what might we do with that? But I'll just let others give some questions so that we have time to gather. Go ahead.
Yeah, be short for the sake of time. So great presentation. I'm sort of curious about how the pragmatist theory of inflation relates to something that we learn both from people like scholars working on financialization, but also sort of central bankers themselves, that expectations about inflation are themselves an integral component of the phenomenon, right? And whether there are kind of interesting parallels between what you're proposing and that sort of perspective.
Could you repeat again? Parallels between...
the theory that you're proposing and sort of this sort of more expectation-based understanding of inflation.
Thank you so much, Martin. Just a sign of how great this stimulating it was. I loved the connection to Tilly. So I wondered, and goes back to the discussion about the method, whether you were more systematic in looking at the 4 different reasons, and perhaps with the method to be cognizant that if it's a diary, story and convention would be more prevalent, and to just keep that in.
It's your fault. I mean, it's really interesting and it gives a lot to think about. Just a quick question as well. We have been discussing the uses of this idea of collective representation. Listening to you today, I was thinking about what does inflation represent? So if we're in terms of collective representations, we're thinking about objects that stand for collectivity. So is it the nation? Is it the economy? What does it represent?
We can choose 2.
Yeah.
Okay. Regarding the health, I admit I haven't and I will. So thank you for that for that suggestion. And your other question was
the extent to which
the state. I mean, so one thing you see temporality. I didn't expect that people watch the central the head of the central bank give speeches and they're annoyed by him and they're frustrated by him. I don't know to what extent it's the method that people are observant more than they would other be, but you see sort of the state reach into people's lives in this sense that the central bank is somehow very but also them blaming the state, blaming the political parties in their diaries. Regarding Tilly, this is an excellent idea. I just got the last version in June of the diaries, so I had very little time, but this is something that is precisely what could be done, comparing the methods and seeing how different stories go. I would say top down, but also bottom up. So it's interesting for me how economists pick up this folk concept of inflation that I wouldn't have expected from performativity, that they will use the language of everyday life to talk about inflation, to say this is a problem. Regarding expectations, I was expecting a lot of expectations in diaries. That was not a pun. I didn't intend that pun, but yes. But I was expecting, sort of coming from the Becker's, fictional expectations, how inflation will be. There is very little of this. A lot of this is about practices and meanings. And I went to the shop. I bought this. I didn't buy this. Why is the price of butter crazy? It annoys me. These types of everyday sort of practices with very little expectations. And for example, I wasn't part of the COVID diaries, but they said there was much more expectations regarding fears of the future, what will it mean for our families, etc. I don't have a good answer to why there's not much about expectations. But sort of here I'm more focused on the experience, a little bit collective memories, because you see also the older people will write, well, this 18% inflation, I lived through 100%, this is nothing. And for the younger, it's a new thing. So you see collective memories, you see the present, but the future not as much as I anticipated and would have hoped for, maybe, even.
Thank you very much.
Thank you.
Let's do another 10-minute break.
Here. It's a delight. It's my first time in Sao Paulo. It's my first time in Brazil. So I will not try to greet you in any Portuguese, but I know how to say ciao, goodbye. So we'll leave on good terms. So I sort of took it seriously when Andre proposed to talk about the new directions in economic sociology more as a thought process rather than a specific paper. And of course, I will go to a specific research project as well, but I would like to use the opportunity to talk about some ideas that are in the process and very much look forward to your feedback. So this goal, right, or what the new directions in economic sociology are, and given my gray hair, I'm coming to terms that I'm among the oldest invited speakers here. Not old, but wise, right? Thank you, Fred, for being here. I can embarrass a very good friend. So this lofty goal allows for a little bit of reminiscing. And I did want to tell you that putting this picture up with the word that we all know very well, I grew up intellectually, so to speak, with the thesis put forward by Mark Grenovetter in 1985 that, and I quote, economic behavior and the institutions are constrained by ongoing social relations. The argument of embeddedness that has been cited tens of thousands of times and spurred a wealth of research into networks and economy and about how the structure of social relations matters for productivity, for job search, for interlocking directorates across corporations, to name just a few. But I see now that period as my intellectual adolescence, if you want to go with the metaphor here, to which I have rebelled, like teenagers would, against this emphasis on the structure of social relations, its sparseness, its rigidity. For a non-native English speaker, it was illuminating to find out that the etymology of the word embedded, first recorded in 1778, means to lay in bed, but later also to use it as a geological term to describe, and this is why the rock here, describe fossils found in rock, embedded. So I believe the picture says more than 1,000 words. It can get hardly more rigid than that, right? But also that the embeddedness argument in many ways upholds the duality of the social and the economic. Something is inserted in it, and we can also extract it. They are just inserted into each other. And this didn't resonate with me. I grew up in the former Yugoslavia as a socialist child, so the real one, not the American Woodstock type of socialism. Those were the times of tremendous transformations of communism, capitalism, global economy. Nothing was stable then. So there was a dynamic of relations and dynamism in the transforming economy that could not be disentangled from society, from politics, from struggles, from beliefs, from emotions. So I wanted to understand how people negotiate their social relations in the economic sphere, how their social relations shape economic transactions, and in a sense to dismantle the wall that often separates what we think of as economic, cold, cash, market, finance, and the social, intimate, to locate also the morality in these growing markets. So, very deeply fortunate for me to come to Princeton University, where I did my doctorate degree as a graduate student, and to learn from Professor Viviane Zelizer and her pioneering work on the interplay of intimacy, morality, and economy. And if that were not enough, what an honor and privilege to further develop with Viviane Zelizer this concept of relational work as a way to think about the role of social relations in the economy. And of course, since I embarrassed him, I now would like to thank him very much for our collaborations, working together with my dear colleague Fred Wary on the Money Talks volume. Some of you will well, most of you will know the Social Meaning of Money by Zelizer. This is the second edition, so you could see how the imagery of those relations was also put on the cover of our Money Talks volume, and not by coincidence. So today I'm here, right, and what I would like to submit to you that I continue to be inspired by a Zelizerian economic sociology, and I do think that is a way forward, at least in the American economic sociology, but hopefully global one too. I know we have great partners across the world, looking over to our Argentinian contingent. So this Zelizerian turn, I believe, is quite noticeable in economic sociology. And as much as it is hard to follow in the footsteps of brilliant Viviana Zelizer, my recent research has also taken me along those lines, and I'll tell you a little bit about it. But if anything, then my title slide would probably be something like this: the Zelizerian economic sociology as the direction moving forward. I have been studying the parenting economy. So while my earlier research was macro, was not foreign investment, was about really the interplay of market transition and globalization. So pleased to hear from Mariana Luzzi this morning on households, and I have tried to understand the transformation in social value of children since Viviana Zelizer's work. So this, of course, picks up on this main concept of relational work. And just to be clear, not to assume everyone knows the definition and how it captures the negotiation or matches or mismatches between social relations, economic transactions, and different media of exchange. So monies, right, in plural. This is the Google Ngram and how attention to the concept has grown. Yeah, pretty good to see after 2000 especially. So I believe this tells us that there's energy behind this, and more to do with applying the social and moral meaning of money lens, and to try to understand these social transformations of value as Zelizer did. So she wrote in 1985 this book, Pricing the Priceless Child, The Changing Social Value of Children. This is a picture of her around that time, 1985. And the main argument was that there was a transformation she traced historically from an economically useful child, children who worked in factories and mines, contributed to the economic welfare of households, to an emotionally priceless child, put in some ways on a pedestal to be loved and cherished. And one could look at the life insurance and insurance that parents took for children to trace these changes historically. So that was the priceless child, right? But what about in the new millennium? Zelizer was writing in the 1980s, but the analysis really finished around 1930, the kind of historical period between late 1800s and 19th century, and then into the early 20th century. However, in the last chapter, if you read it, she in the 1980s, of course, was thinking a little bit about how this applies during the period and where things are going, and has argued this is the title of her last chapter, From Useful to Useless and Back to Useful. So perhaps children will get back to being useful. In what ways? She had two propositions. One was that they will be contributing to the household homes. In the 1980s, women were going to work. Children could be useful, washing dishes. Another proposition, of course caricatured here, would be that children could take a greater part in market work, in fact, right? Perhaps not in the boardroom, but maybe, little monies at the lemonade stands and small economies that they could participate in. Did that materialize? So we looked a little bit at what the 9 to 12-year-olds would do between 1980s, when Zelizer was writing that chapter, to the latest data that we had available from, in fact, diary data of time spent on different activities. So that's another way to use diaries, right, was to track the time allocated to different activities, going back to Martin. And you can see that chores, right, how many people do chores, we need to look at the blue, right, the blue, 92%, so nearly all the kids in the 80s, but only 2/3. I mean, we're talking about once a week, right, taking out trash, cooking, cleaning, 9 to 12-year-olds. I don't know if you remember what you did as children, but that certainly was much less than what was expected in our family. Also, an interesting report from an even more recent study in 2017 that 82% of adults said that doing chores as a child, they did them, right? But only 28% were having their own children do household chores. Now, how about market work? Even starker difference. About 12%, right? Some share, you could see it was noticeable in everyday life. Nearly zero in the US in 2003, right? So what do kids do? When asked for the major reasons for their non-involvement in market work, 92% of teens in 2014 said they're going to school, right? And not only during the usual academic year, also during the summer. So these are the numbers of kids enrolled in school in July. 1985, only about 10%, and 40% in 2016. So our argument, that got a little bit more artistically designed on this presentation of slides, is that the pricing of the Priceless Child 2.0 in the new millennium is about building children's human capital. So this article, in fact, came out in Theory Society not too long ago, Advanced Access, and it's open access, so you're free to check it out, with a very wonderful collaborator, a graduate student at UC Irvine, who just defended her dissertation a couple of weeks ago in the School of Education. So it was a great collaboration. Michelle learning a lot about the social meaning of money and being interested in me being able to shall I use the word capitalize on her great understanding of education. So this is the image from the Theory and Society webpage of the article. That, in fact, is titled "Pricing the Priceless Child." How bold, right? We're using the exact words. However, when we think a little bit about that phenomenon, what we wanted to pay attention to is the broader changing of the society and the growth of attention to this idea of human capital that we also see in one of the Google Ngram images here. So this is not just about children, but it seems to be about a broader transformation in society. And to go back to streams of thought in economic sociology today and the role of economists in shaping our understandings, not only of the economy, but of various aspects of social life, not only of social policy. Yes, I will have an image of Beth Berman's book too later on, but also of the home, of the casa, right, of the house, and that was, I think, a great link to Mariana's work. Very quickly, Gary Becker, Nobel laureate, Chicago school economist, was the one who popularized the notion of human capital. He defined it as such: investments in human capital, activities that influence future monetary and psychic income. Well, basically, then it became, how would we capture it empirically? We would capture it in the number of years one devotes to schooling and training and that experience, mostly related to education for that early period of children. 3 editions of this book, and in the last one, Becker says, oh, it's so wonderful that human capital theory mushroomed throughout the world and stimulated a profusion of research and policy proposals. The citation for the human capital, by the way, citation for his Nobel Prize was linked to his research on human capital as most outstanding, and why he was named the 1992, I believe, Nobel laureate. But what is really important too is that psychologists more broadly, not just economists, have taken up economic concepts and have taken up econometric measures. And here we have 2 studies that have been crucial in understanding sort of early development that other economists have picked up too. So don't have time today, but I've also looked at the role of James Heckman, who has picked up investment in preschools and early childhood development using these studies, in particular, I think the Perry preschool study, to show how important it is to build human capital very, very early on, even to give a number to it, that if you invest $1, you will get a 14% return. Don't get me, I can get you the numbers if you're very curious, but a very precise, in some ways, estimation as to how investment pays off. Investment and return very clearly. Zelizer was looking at insurance, was looking at adoption, to trace it. What we look in this article, and it'll just give you images of a few things, are enrollments in early childhood education, federal spending on early education, federal spending on K through 12 programs. This is kindergarten through high school in the U.S. Yes, very U.S.-centric here, but following in some ways to Zelizer's analysis. And also parental spending on childcare and education, especially in comparison to spending on other categories of monies for kids. So let's look at some of these. And just to say that for us, these public monies say something about what is valuable in the society. Percent of 3 to 5-year-olds enrolled in primary school, just as a background, how this has risen. It's a tremendous transformation since the 1970s, in particular for children who attend full-time. Like 3 to 5-year-olds are in organized centers to get schooled, from 6% to 41%. And then there's a, required really kindergarten, it's called in the US, kind of the year before you go to primary school. Head Start is a key program that the government does do very little for families in the US, but they do provide monies for the Head Start program that targets lower income families. And you could see how this has grown and of course adjusted for inflation. And if anything, we could think about support to families and children in different ways, tax credits, income security. It has been going to education more than to these other categories. Over time, the change has been mostly for education. And before you say, oh my goodness, right, in the US, we do so little for education, it's so varied. Indeed, in relative perspective, right, it's still much less than in other countries. But if we were looking to within that scope and boundary conditions, it is still for formal education. So the focus is on that. This is parents spending between 1960, the gray, I know those numbers are very small, but just look at the lines. Childcare and education at the very top, only about 2% went for that, to raise a child up to age 17, while this has grown to 16%. And, we also have to house children, we have to, health insurance, get them clothes, food. Yeah, I was looking for the one that's kind of important. All those things, right, are big expenses, but they have somewhat decreased, in fact, in the share. Here's just a number, and you could look at it basically to say how much it's grown since the 70s. If we look at parent spending, childcare and education, nearly doubling from the 1970s, while comparison on these other categories has decreased. Going back to, now they have a little bit of a sense of where the empirics come from, Gary Becker, and connection to discussions of the rise of the economic style of reasoning and its application to traditionally non-economic spheres, we could think about this human capitalization of children in the broader framework of the spread of economic style of reasoning that has propelled these specific ideas of human capital investment into public discourse and public policy. So I am increasingly interested, not only because of this work on children, in this notion of human capitalization, right? What can we subsume under that? And I believe that it is one of the, yes, very generally economic style of reasoning, but there's a lot of discussion, here's your literature review, the briefest one, on economization of life, right? And economization, of course, with Chalish-Khan and Calon, and I know Simone yesterday probably talked, or at least your work is also along those lines, but looking into other spheres, right? Not the ones that we would typically consider to be in the economy. So here's the image I promised, and please, if you haven't yet, get this book, Thinking Like an Economist, How Efficiency Replaced Equality in U.S. Public Policy. I believe this argument of human capitalization of children really is about how sort of efficiency in investment and return into children has replaced kind of a general sense of child rearing and socialization. And is it a political issue? George W. Bush was keen very much on focusing on raising human capital. This is what we need to do as a society. This is from his State of the Union address. So that's why it's not surprising that his son, George W. Bush, later on talked about the importance of, strengthening the skills and talents of people or human capital. But the other side of the political spectrum, Barack Obama as well, and this is one of the arguments of Berman as well, and how this is not conservative approach. In fact, it is the one that has been embraced by Democrats. We could talk a little bit about it in the interest of time. I've been talking about how much you know, Andre. That's
about 20 minutes.
Okay, yeah. For the discussion as well, right? So I'll try to wrap up in a few minutes. So we could debate, right? There's an interesting article about human capital education, 3 goals of education: social efficiency, social mobility, but also democratic equality. And how, if schooling is about human capital, privileging these human capital concerns in education is done at the expense of building values of democratic equality. And if you think about the situation in the U.S. currently, one could think a little bit about where is being a citizen compared to other kinds of priorities that parents also think they have for their children. And there's a critique by political theorist Wendy Brown, who's at the Institute of Advanced Studies in Princeton now. She was at Berkeley. How thinking of education as primarily valuable to human capital development is actually undermining democracy. Want to make sure, right, that we think broadly along these lines. Wanted to call on Bill Hooks, who is a feminist scholar, conceived of education also very different terms as the practice of freedom that connects the will to know with the will to become. I really like that notion, and some education scholars who put forward an alternative to say, why should we be maximizing, why should we be increasing productivity as education tries to do, especially very standardized one, focusing on cognitive skills. What about this child-centered curricula that bolster creativity and a sense of oneself as part of a greater collective? That has been missing very much. So one could see how human capitalization is very individual oriented, and these other notions, of course, built on the notion of society and us being part of that. So even during the pandemic, this is what was coming up, right? We're protecting human capital of children. This is what we need to do. That's a slogan of one of the posters I found. And why, right? Why does it reign in the present era? What are some of the reasons? So this is just exploratory, really, and using two additional engrams. But while I talked a lot about economization and human capitalization as a part of that process, I believe it has a stronghold because it so effectively combines the attention to emotionalization of life as well. So there is absolutely not just, I'm building up my child as a machine. I love my child. This is what I need to do for my child. And so it's really a strategic research site to see a conflation of both emotionalization and economization of life. And there are other ways in which to think about it, right? The platforms, the invest in yourself, be, your own entrepreneur, not just of things in kind of the neoliberal Foucauldian sense, but use yourself, your skills to capitalize on it. And so just very interesting here, I guess now, I love these engrams. If teamwork, right, in organizations is something we would pay attention to because it's, after all, a social space where people have to work together. This idea of coaching individuals in organizations and helping them find themselves and develop themselves to contribute productively to organizations has been an interesting sort of paradoxical, and that's why I call it the unbearable lightness, because it is so well-intentioned, but at the same time kind of offloads. We talked about, that what state does to individuals, in this case organizations, offload how you would advance to an individual themselves. Very broadly, in the last couple of minutes, something I've been thinking about, and soul searching and what are we doing? This is a graph of to what extent the resonance of economists, but also psychologists, has surpassed American public discourse in how they're being called upon. Sociologists are this bottom darker line, purplish, and then psychology is above them, and the very top, of course, is economists. This is just an archive of New York Times, of course, a selection, but a way to get into this idea of what kind of thinking is out there. And I would say that human capitalization very importantly bridges attention to psychologization of life and economization of life. And that's why it's not surprising that sociologists have declined in their relevance, or at least in who you call upon when you want to know what's going on around you, which we have to fight, right? So sociological imagination, where art thou? And would like to, hear a little bit as to how this works in other countries, because that's not necessarily a phenomenon that is common. But nevertheless, a preview a bit of, not preview, but just invitation if you are in Rio. Thursday, Ariel Wilkes has organized a wonderful panel on the public sociology of money with, in fact, Fred Wary and myself participating, but also Viviana Zalazar zooming in from New Jersey. So thank you so much for your attention, and I look forward to the discussion.
Thank you. Questions?
Thank you so much, Professor Bendel, for your presentation. I would like to ask a question exactly on this issue of the economization of the various spheres of life, and our language is economized in many ways, the way we express, the way we think about the world. And in your practice as sociologists, which ways have you identified to puncture this bubble and this monopoly that economists and econometrists have on the public discourse itself, and how can we, invert that last graph you showed, if that is a possibility, or if it's such a deeply rooted structural problem that it's not a possibility, at least not in this time. Thank you so much.
It's the $1 million question, right? You started with it right away. In fact, it's really interesting how the notion of human capital is unreflexively used even among sociologists. As just lingua franca, oftentimes. So the notion of investment, I have another piece that looks at the language and the concept, links back to households, of parental investment. And of course it seems like, yeah, it's money that goes to children, what else would we call it? But as you said, uses the word investment. There's a lot of talk that I noticed in the public discourse about optimization, right? You know, it's just the optimal way of raising children. You know, we're supposed to be productive around it? You know, how we think about, hope you have a great summer. I hope you have a productive summer. Have to be productive, right? This is productive and relaxing. Total economization and emotionalization, right? They're entwined. But how paradoxical is that? Thank you, Adam. So I would say that while words could, you know, of course, I'm talking to those who pay attention to words here and to meaning. They're not just coincidental. And I have caught myself in trying to be more careful in how I'm phrasing certain things. So, you know, to call raising children parental investment is a particular way of scaffolding this economization. And in some ways, probably to keep up the reign, especially if you look at family policy. In the US, it's really not family friendly. It's family hostile, if you think about it in some ways. No paid parental leave. You know, like $500 maybe on average they summarized. And then investment in other OECD countries is $14,000 per child. So, you know, just real degrees of magnitude. And you call it parental investment, assuming it's going to be on parents to invest in their children, not on the state or the society. No.
So thank you for a really interesting presentation. I'm reminded of, there was a talk given by Gary Becker where he was talking about Foucault, really understanding him and understanding this human capital as entrepreneur of the self. Yeah. So I found this really fascinating, but I'm wondering to what extent this is a class phenomenon, that it relates to sort of the children of middle classes. And I'm thinking here of sort of all the push in various states in the US to introduce children, changed labor laws so children can work to sort of earn money. To what extent this is, I don't know, maybe like a double movement of children being decommodified and sort of then commodified in a version of investment, but then also going back to work. Just to, if you could speak a little bit on this.
Lots of different ideas. I will just pick up, I'm not sure whether you intended it this way, Martin, but I get a lot of questions oftentimes about how classed this is, right, to whom it applies. And part of the project I'm working on involves 120 interviews across the socioeconomic and racial and ethnic spectrum and sort of immigrant generation, political persuasion, religious affiliations. So a real broad look at, except mostly they're urban, so I have to admit that, not rural families in the United States, of course. And it's not only that I find it's prevalent, but not really codified in these terms, right? It's not about, parents don't talk about investment, actually. Very rarely they do. They talk about doing as much as they can for their children. And they understand that there's something to good education, whatever that is. The children need good education. Like, what does that mean? Well, the teacher should be okay, right? Kids should not be bullied. And it comes back to emotionalization, comes back to securing emotional welfare of children. That's very entwined in. So that is across the board. This idea of being, and also being a good parent. That's very big. Like, what do you need to do? Being a good parent is really important. So not so much about what you need to do for the children, but that I feel and others don't judge me as a bad parent. And that again also translates, and that's where emotions come in as well. So, you know, in the US, there's a famous book on parenting styles that Annette Leroux identified in kind of the early 90s, concerted cultivation, so this real intentional effort, which many people might think, oh, that's human capitalization, right? But if you talk about to parents, and in fact it was Patrick Ishizuka, we have a great presence here from Princeton University. He got a PhD at Princeton, who sent out or presented situations to parents across class of what is a good parent, what is excellent parenting. And it was this idea of being very intentional, very intensive with your child, organizing their schedules. Now, this doesn't mean that the reproduction of especially cultural capital goes away. But the fact that you have to do something with your child and not letting them to naturally grow is now prevalent in these ideas. So I think that's really important to know. At the same time, it's also very important to say that the language of investing and the language of, especially investing because I fear downward social mobility of my children, is much more present in the public discourse than I found to be among families themselves. There's one mom, really, a black mother, who said, I really don't want my child to fall behind, that everyone's going to be more ahead, and then use the word investment there. But we really coded, deduce these narratives, like trying to look, since it's so prominent, right? Why do you do this? Well, because there's such great inequality and because I don't want my children to fall behind. But these are upper classes, right? I mean, rationally, you have nothing to worry about. Your children will not fall behind. But, no, it's Fred, I think. And I should be briefer in my
and I'll be... okay, good. But I'll be brief. One of the names that didn't come up, but I think would be helpful for this discussion, Rourke O'Brien and Adam Hayes.
Yep.
And so I think why they're so important for this discussion is that they actually sort of take relational work and then use experiments that are typically done by psychologists, and they ask, does it change the way people think about investing? Does it change their risk profile when you're thinking about your children? And then they show that it does, right? Yes. And so I think part of sort of thinking about sort of where we're pushing on the frontiers is the extent to which we're borrowing from other disciplines in terms of their methods.
Yeah.
But we're using those methods in different ways because of our understanding of the role that relationships play in structuring our economic behaviors. So one question is sort of how do we think about sort of the Rourkes of the world as they emerge? I guess the second question is emotions. You've written on emotions in economic life. One of the emotions that we don't see so much is the emotion of shame, and I'm just sort of raising this because it's what I care about. So how do we think about sort of how parents are understanding their responsibility, and how they're trying to avoid and evade shame? And so there are lots of things that they may or may not be doing, but they know what they're supposed to do. And so how do we think about shame as one of those sort of structuring elements here?
No, those are great. Thank you. You can see why the two of us love to talk to each other. Yes. Goes back a long time and to a different place in the world. I will take up shame first, Fred. It's really very present, right? Shaming, being shamed as a bad parent. While parents don't really use the word, the way they talk about being a good parent, and it's also gendered. So very much the moms looked into that because it's really then pointing to the double helix, to the double burden of this idea of invested parenting. It's to secure the emotional welfare of the child, but also what does it mean to be a good parent, and more present for mothers. And of course, this is very gendered. It perpetuates the stereotype that a mother is always torn. There's a cultural contradiction of motherhood, right? It has to be at work and in the home, and we would expect then much less in the home. But now even more intense, both in the work and in the home. So I think that's really Guilt is big too, right? So Katie Collins at UT Austin, I think, yes, wrote about making motherhood work and compared not just American moms, and I think this is why it's interesting, but Swedish and Italian and German, and there was a different sense of gradation, but still nevertheless guilt, right, that was present with all of them. Learning from experimental design, or kind of thinking about how we can use these meanings and test the actual hypotheses. I think they do it very well. Of course, this is a social forces piece. Relational Investing, I think, is the title, by Rourke O'Brien and Adam Hayes. Maybe Hayes is the first author in this one. And it makes so much sense when you look at this history of where does the sacred bond come from, right? And why is this bond more sacred than some other bonds? Why is it parent to child as opposed to the spouses, right? Your romantic partner. Oh, but of course not, right? There was like a big, I'll just gossip a little bit about this book that a writer wrote about, or an essay in the for the Modern Love column in the New York Times, about how she loves her husband more than her children. Oof, Oprah Winfrey talk show, moms, just this is horrendous, right? How can you say it? And she said, well, then I'm a bad mom, right? Like owned being shamed. And of course, capitalized on it by selling some other books. But it's obvious that this, just kind of from the problem out, or at least like a little bit of a gossipy discussion out, you could sense where the values are. Yeah. So it's good.
So thank you. This was wonderful. And in the spirit of sort of research that needs to be done, children's perspective. How do you think, like, I don't know, the ethics of the interviewing children. I don't want to go there, but sort of if we could, like, what do you expect them to see these changes as? And sort of like as a second, somewhat related question, like I'm sort of thinking that there's this. I have a good friend, former Virginia UVA student, who writes about the transition to adulthood. Yes. There's sort of an important literature about how, in a way, like if you look at like kind of how children become adults from the point of view also of kind of class distinctions, often this concept of the therapeutic self is very important. And I'm sort of wondering if that may be is something that you find useful, or just kind of fits in what you.
Great, yes. Also love talking to Simone. No, these are certainly things that I've thought about. I just want to plug in, because I'm so proud. One of my graduate students also just defended her dissertation. She did not talk to children, but she talked to young adults. And it was really interesting because she talked about money matters and what money matters and what children expect of parents. It seems to be a real transition and a generational change in, to be very blunt, they had me, they should take care of me. I did not ask to be born. And this was not just kind of privileged upper class kids. These were mostly, the sample was of women of color, Asian women, college going, and early, recent graduates. So yes, sort of socially mobile. But the lack of even, what some of my other students look at, this brokering role of children in the immigrant families, there was very little discussion of that, especially in the expectations of parents contributing to financing children's college education. So I think we could connect the dots here, right? If there's this devotion, it has to have some impact. And in fact, children kind of enact that expectation that, they are the receivers of this investment. That parents, there's another little anecdote from the interviews. What do parents expect children to do for them? One would think, okay, in older age, take care of them. What's the most common answer? Nothing. I really don't have expectations. I'm not doing this because I'm expecting that they would take care of me. That's not fair. Who knows? I should take care of myself. I'm saving and, it shouldn't be a burden. If anything, I would like to have a relationship with them. that they would come and visit, that they would stay in touch, is really, again, looking at, Asian families. Typically, one would say there's a big notion of filial piety, care and responsibility. You don't really see it. Of course, these are all parents in the U.S., and I don't know how this would be, but just I guess I have lots of students. Another student wrote about South Korea and brides, kind of transnational brides, women who emigrate from South Korea to marry South Korean men, but come from different parts of the world, sending back remittances to the family. Once the children are born, it's for the children. So what you send back is more a gift, not anymore kind of the expected payments, because you are investing in your own children. So, that's a big empirical question, to what extent this is so I'm curious to hear what the experiences in your places of the world are with this phenomenon. Ben?
This is really interesting. As I understand your argument, you seem to be saying that the rise of a kind of emotionalization of parenting is mystifying in the increased emphasis on investing in human capital, that kind of like they go in tandem, but that one is covering up for the other. But at the same time, in the U.S., but elsewhere too, you see a kind of re-emphasis on the meritocracy narrative. So even in the recent Supreme Court case in the U.S. around affirmative action, the argument is all about meritocracy versus affirmative action. How do you see this trend in kind of the twin rise of emotionalization and economization in relation to the recapturing or kind of increased emphasis on meritocracy as a kind of conservative narrative around the role of children in society?
If there's a common denominator both of emotionalization and economization, it would be the focus on the individual. And this is where meritocracy comes in as well, right? It is to focus on the merits, right? I mean, the talents, the individual choices. And, so when we talk about emotionalization and economization, obviously from the broader societal perspective, but when it comes back to the frames with which to interpret one's position in society or what one does, that's why I think meritocracy reigns, right, still as a big narrative it's obviously more connected in some ways to, if you invest in human capital, you have more of it, right? So you have these talents that will then show, and that is just the right way that things should be, because it's well deserved, right? What you will capitalize on your talents, on your merit. There's nothing like unequal social structures in some ways that would prohibit it. But when I think about it, if we were to bring in emotions, it's really something that makes me think, is there an emotional aspect to insisting on meritocracy? It certainly is pride. It's doing it on your own has a sense, has a feeling to it too, right? So I'd be curious if you have more thoughts in which we could connect it to emotionalization as well. That said, where I'm coming from to the concept is, of course, and it goes back to therapeutic self not only, but therapeutic culture. It's like, the individual is the point in which, that we have to be concerned about through the psychology of it all, right? So I would say that's certainly the background of that. Yeah.
We have some questions from Zoom participants.
Oh, I feel honored. Them and then must be kind of the affection zooming out of these loving coins.
I'll just get a little bit closer so they can hear too. We have one question from Juan Montezuma. He asks, what would be the role of social networks in returning children to an active role in economic activities? Are the new forms of entrepreneurship in the digital space catalysts for this transformation, and thus leading to a premature introduction of children into the market, not only as passive agents, demand generators, but also as specific cadres of the service sector? Yeah. That's the question from Juan. Would you like to answer it first, sir?
Very quickly, I will say that's the hope, right? I mean, in the end, writing a book about this too, I want others to read it. You feel some public sociology responsibility. What do you say? You just lay it out. You say this is the invested parenting. Are there alternatives? So I'll just call on two, right, that really point to this intergenerational integration. Tag along children, right? Not sitting at the head of the table, but being part of, maybe very archaic, it takes a village. So there's an interesting article in the New York Times on Japanese babies coming into old homes. They work. They get paid in diapers and, mushed food because they come and they keep company to the elderly. And then there's, I think, possibly, I don't know, my sister lives in Amsterdam in the Netherlands, but they are called the happiest kids in the world. Probably more of a integrated into the network across generations way of thinking about children rather than paying all attention. French are pretty good at that too. It's really interesting that among all these countries, time spent on children has gone up since the 60s. In France, it has gone down, especially with educated women, which again, in other places, educated women even more. And so one wonders, what about French? So let me know. But I would imagine that those social networks, that community kind of way of, you go to a nice restaurant, you don't care what the kid was going to eat. We'll make do. You don't not go to the restaurant and get a babysitter to not take your kid with. But I would say the solidarity, right? Thinking of children as common responsibility rather than as private investment has to be there somewhere, right? Yeah, so that was a great question.
The next question is from Tali Piris, and Tali wants to know more about the differences from the 1980s to the 2000s on what children spend their time in school or at home or taking courses. And so she asks, are you considering the changing in life conditions, in labor conditions, the increase of violence in the cities, the decrease of neighborhood solidarity, the changing family structures? Parents maybe prefer to let their children at school or church than letting their children at home or alone in dangerous neighborhoods.
Yeah, no, these are great points. So I'll just say thank you for raising them. This certainly is very complicated, and one would probably want to look at these different circumstances in which, let's say, it's just not safe to not, to leave your kid by themselves. It's not a matter of responsibility and when they should do more in the household, but what and we hear a little bit from working class families how this is linked also to homes, and where you have a home, you want to have a safe and good environment for your child if you can. So yes, lots of changes, transformation. And in different places, I would say very differently. I also want to note that I wrote about the productive role of children in immigrant families. So I do think the story is more complicated. It comes back to, what do children do? But at the same time, when we talk about when you talk with immigrant families, what is the most ultimate sacrifice in some ways emotionally than it is to move to secure a better future for your children? Right. So maybe not in everyday life, you have a view of children, especially with siblings, they do a lot of that, right? Maybe not, they help out, coming back to schools, with homework of their siblings. But when immigrant parents discuss what they want from the children, they regret, again, emotions that they cannot do more financially for their children. It's a big burden. It's a big burden for them. And so that kind of expresses similar notions of what is valuable and what they think a good parent does these days. So it's hard. It's a very hard. I'm not telling any parents, do not invest in your children. Who am I to say that, right? But at some point, in some ways, parenting is on steroids in certain places for certain groups.
Thanks, Nina.
You have kids, Adam?
No. I do concerted cultivation with my dogs.
That could be another project.
Yeah. Oh, yeah. Also very classed. Thanks for this. And I've heard you I've heard
You have
you present
versions
some
of this, yes.
versions of this before, and I realize the emphasis is very much on sort of a descriptive documentation of a sort of central tendency or dominant trend. I expect the book is more focused on heterogeneity because you have the space to do that. Beyond the sort of the phenomenon and the trend, I guess I'm curious if you have what your thoughts are on the explanation of where this comes from, what's driving it. The rendition today, you talked a lot about economic theory and sort of ideas percolating culturally. There's another version that this is about a sort of cultural response to other processes of individualization of the winner-take-all society, of the rising cost of, say, going to college, which then sort of heightens the stakes, right? You can't even pretend for a moment that the child is priceless because you're told to start saving immediately for those expenses. I suspect it's some of both, but I'm just curious sort of what your thoughts are as you work on the book about that aspect.
Yeah. No, it's a great question. And I'll actually say something about maybe not what you had in mind, but to think about sort of putting it in perspective, whether it's this growing inequality that forces these processes, which is a very prevalent narrative. Going back historically, what I do also for the book is analyze, kind of broadly, about 120 parenting books, starting with Benjamin Spock, who was this big author who in the 1946 wrote a book that is dubbed the Bible, the parenting Bible in the US, and said, it's really the emotional child that needs to be attended to, kind of from a Freudian perspective, but very much departed from the more behavioral models of kind of rewards and punishment, and that we listen to pediatricians for advice. Parents can be their own good guides. So there's a growing parenting advice literature that cultivates the emotional parental self. This is what I argue based on that in some ways precedes these changes of income inequality, and that then scaffold what could be a reverse loop of, in fact, growing inequality due to that, not only because of it. So I think that's maybe one point that might not be as obvious, and that I can benefit from some actual primary work on these volumes. It's really 60,000 hits on Amazon last year if you type in parenting under books. Yeah. And of course, what's interesting goes back to emotionalization. I'll just add that to me is that the advice is coming from everyday moms, journalist moms, oftentimes, not psychology experts. There are a few, right? Daniel Siegel, who's a medical scholar. But if you just look at the trends, it is these emotional narratives of being a parent that, in the Netherlands as an American mom, in France, a Tiger mom law professor. That's not law, right? She is an expert, of course, but this is a narrative, a story going back to Tilly that resonates emotionally with the audiences. All Fun, one of the bestsellers. No fun, all joy, right? What's parenting? No fun, all joy. Jennifer Senior's book, she's a journalist, right, writing about this. So I think it's really interesting that expertise on these topics are becoming these emotions, it's the emotions that have carried the legitimacy of moral arguments, not advice as it used to be from doctors, from pediatricians, and from psychologists. Of course, there's also parenting psychology experts that have podcasts, and people flock to that. It's just notice it's all over the place. But I thank you so much for your attention. I really appreciated your engagement. And, for those who have children or not, we have one more.
One question from a Zoom participant.
Okay, that definitely, because they have been great in coming and not seeing everything in real life. So I will want to respond.
Louis Harrison asks, I was wondering if we have not been experiencing a time of priceless youth, at least among upper-class families. If so, could it be likely connected with the changes in the labor market, such as the new structural unemployment process related to the new technologies, AI, robotics?
Again, a very good question that tries to identify structures that would shape these phenomena. And there certainly are regulations. I mean, chicken egg problem, right? What comes when? But for instance, there's now response to lots of rules as to how you can leave children on your own and when can they start working. 16. My kid is 50. Well, we'll turn 16 at the end of this week, actually. It's like you can't work before, right? And get paid for in California until you're 16. That's kind of late, right? So there are absolutely regulations and structures that shape this and scaffold it in some ways, right? To maintain it. Labor market, one could think, right, how one hides unemployment is to, in places where it's precarious, is to insist that children need to go, or young teens too, to go to school and not to have unemployed youth. And that would vary, of course. In the U.S., you see how teens and teens of color, and in particular young African American men, that is the group that is most at risk of unemployment, is kind of 16 to 19 or 24 boys. So I think these structural changes are certainly very important. So I think the great comments that put the story in a much broader, truly sociological perspective from our participants on Zoom. So thanks so much for being here, Zoom people, if you see me. All right, and all of you, of course. I don't want to hold you from lunch break. I really appreciated everyone's attention. Thank you.
Thank you.
Yeah, we'll have a lunch break and we'll resume at 2 p.m. Thank you very much for these 3 wonderful presentations, by the way.